All right, as we come back here to the KFYR Plus News Desk, it's Tuesday, it's Tax Tip Tuesday, and today we're diving into the tax difference between homeowners and home renters. From mortgage interest and property tax deductions to renter credits and overall tax advantages, we'll explore whether owning truly offers a better tax benefit. Joining us now, of course, is tax expert John Saylor from Total Tax Solutions. Good morning, John. How are you?
Good morning, Jay. How are you doing? I'm doing really well. It's the middle of tax season almost.
Middle of tax season and you are smiling. I see it from ear to ear, my friend. You've got that grin going. That means you're working hard, and I know how much hard you love working hard. So this is right down your alley. But it comes to an end. All good things come to an end April 15th, but everybody has got to get filed. So let's talk at a high level, John. What are some of the big tax differences between homeowners and home renters?
A couple of the biggest differences, Jay, is a renter is just like if they're leasing a car. Well, home renters renting a home,
Mm-hmm.
they're paying to live there, and they really have no deductions when they're renting a house, and they have no deductions. If they own a house, they're all obviously putting money the principal amount towards that loan, so they're building equity in that house. The other nice thing is if they're able to itemize, they can itemize their mortgage interest, their mortgage insurance, and their real estate taxes that they pay, for the house, which if they can get above that standard deduction, they can take all those extra deductions and get a higher standard deduction or a higher itemized deduction on their tax return to get more money back and stuff. Where people that are renting, they don't have those deductions to use because they're not the ones that are paying the mortgage interest, the mortgage insurance, the real estate taxes, or anything like that. It's basically renting to rent the home and or rent the place, and they don't aren't subject to any deductions, unfortunately.
Yeah. Okay, so let's talk about it since you brought it up. How do mortgage interest deductions work and who actually benefits from them?
So the biggest thing with mortgage insurance, or mortgage interest and stuff is some people have multiple loans. Like if they did they bought their home, they've got their primary residence mortgage interest. Well, then if they do like a build out or they take a loan to improve the house, they do build a shop or something like that. So now they have a second loan. That mortgage interest is also deductible because they're improving the value of their home, they're improving the value of their place, their land, whatever. So they can include that also. So what that does is by more mortgage interest that you have, the higher itemized deduction you can get on your tax return. The problem is here back during COVID, right after COVID, and a little bit before too, most people refinance their homes and get their interest rate down to under 3%. And
Hmm.
that's unheard of rates, obviously, and stuff. But with the lower interest rate like that is great, you're not paying as much, but it also decline or decreases the amount of mortgage interest that you're paying each year. And right now, probably 95-ish, 90-ish% of America is actually taking the standard deduction because it's so high right now that their mortgage interest, real estate taxes, donations, none of that comes into play. Because if you're married filing jointly, that standard deduction is $31,500. You got to be above that to itemize.
Okay. Let's talk property tax deductions. Now, of course, we are pretty fortunate here in the state of North Dakota where we get property tax deductions. Are there limits or recent changes people should know about it?
Yeah, so the new SALT rule, the new state and local tax, went from $10,000 up to $40,000 now. So now they can get more of a deduction if they got more property taxes and different things like that. Um, so that helps. Some people get confused with the real estate taxes as far as the new primary resident credit, the homestead credit. Those are all taxes toward, or those are all credits towards your property tax. It has nothing to do with income tax. So a lot of people come in and they ask, well, did I get the $1,600 credit on my tax return? No, it has nothing to do with your tax return. It has everything to do with lowering your real estate taxes that you pay for the year. So as long as they're
Hmm.
filing those by the deadline, I think March 31st, they're getting that credit, so they're paying less on their actual property tax. And there again, it's the less property tax you pay, the less you're paying, or the less you're accumulating towards your itemized deductions.
For homeowners, John, who are paying off their mortgage faster or maybe refinancing, how does that affect their tax profile?
Sometimes it if they refinance in a year or they get a new loan, sometimes it really helps them because if they have a bunch more mortgage interest, because they refinanced or they paid down more and paid more, it just all depends on the amount of interest they pay throughout the year. The key thing that people need to look at, because you can't prepay interest, the key thing is if you're close to that itemized deduction line, is you can pay your real estate taxes twice in 1 year. So the prior year taxes you can pay in the current year, and then the current year taxes you can pay in the current year. Um, you know, but that kind of gets some people over the hump also, is by double paying their real estate taxes in the same year. Then
Hmm.
obviously the next year they don't have that deduction sometimes. So
Okay. Are there any tax advantages that renters may be overlooking, especially those who freelance or work from home?
Good question, because somebody just asked us this question yesterday. They thought they couldn't do the office in the home because they rent. Well, absolutely not. If you've got a 10 by 10 spot in your house that you use as your office in the home for your freelancing business, your Schedule C opportunities, your independent contractor and stuff, absolutely you can take a deduction because you're utilizing that home office. Now, it has to be ordinary and necessary for the business, and it also has to be an exclusive area used for the business, like with a desk,
Hmm.
a TV, a monitor, a printer, whatever and stuff. And we take that space. Sometimes we expand the space a little bit more because you do need, most people walk around when they're talking on their cell phones, and you do need a bathroom and those types of things too. So it just really depends. But if someone's just sitting down at their kitchen table, we do still account for that because they do have to have an office where they're doing things.
Okay. Do you have to have visual proof? Are the IRS going to come out to your home and inspect your, 10 by 10 office?
That's kind of the key to everything is if you're audited, that's where they're coming out, and it's not like you're picked just because your last name starts with a D.
Hmm.
You're picked in a random selection, and they come out and they audit, and if you have office in the home, they're going to say, okay, let's look at your office and the home deduction. You're reporting 100 square feet, 10 by 10 room. I need to see that to qualify that space. If you don't have the space, they just disqualify or disallow that expense or that deduction. But yeah, if they want to go do a home visit during the audit and look at your home office, they actually have that opportunity to do that. If you don't let them, then they can disallow it too, and stuff. So, are they do they have to have pictures? No. Do they have to have a drawing, proof, and everything? Not necessarily. We kind of urge the clients to have something with your tax documents, just something so that if you're audited 3 years ago and stuff like that, you have that picture or you have that drawing that, hey, this is the area that I use for storing my realtor signs, or this is the area I use to store my chemicals for my car washing business or something like that.
Hmm. Okay. Let's talk one mistake that homeowners make on their taxes every year. What is it, John?
The one biggest thing is, prior to this was the residential energy credits. They put in doors, windows, insulation, those things. Well, the residential energy credit and the home energy credit just seems to kind of come and go, come and go, come and go. And if they weren't keeping track of that, then all of a sudden they're like, oh yeah, I put in new windows. Okay, well now, if you want to take that credit, you have to have that receipt, and you have to have I think it's a 6-digit code from the manufacturer that says that, yes, this is an energy efficient door, or yes, these are energy efficient windows, instead of just saying, yep, I put in new windows. Okay, well, are they really energy efficient rated?
Hmm.
Are from the manufacturer? There is a code now that we have to put into our software for them to get the deduction. So kind of clamping down on some of those things, but that's the biggest thing, is kind of missing those home energy credits.
Okay, one piece of advice, John, that you'd give someone preparing for tax filing season this year.
The biggest thing is, I want to say take your time, but you're limited with the amount of time. But the biggest thing is to really understand why you're filing your taxes. Number one, because it's a requirement and it's compliancy with the IRS. But number two, what's going into preparing your taxes? What are you doing? If you just gather up a bunch of documents, drop them off at a tax firm, they prepare your taxes, and then you come up, you sign, you pay, and then you walk out the door. You're just not doing yourself the due diligence, because
Hmm.
there's some things, ask some questions, well, what about this, what about that, and take the time to understand what's going into your tax return, because that's what you're filing with the IRS, or you are filing with the IRS, and that's basically your report card for the year. And if you don't know what's going into it, or what they're doing, or how you need to really understand what's going into your taxes, because that's, like I said, it's your taxes for the year. And if you file it and you want to change something, now you have to do an amendment and go back to that year and amend what was right or wrong. And sometimes it may even make you file an amendment from 3 years ago for the next 3 years, because of the fact of like depreciation on a home or a rental property or something like that.
Okay. So, luckily for the folks that are watching, of course, Total Tax Solutions, you would ask for those that are new customers to bring in the previous year's tax returns so you can kind of give it a once over.
Yeah, absolutely. And that all of our new clients, it's a must that they bring their last year's tax return in for a couple of different reasons. It's We want to see if they had certain retirements or dividends or capital gains or something. I want to say, hey, last year you had this. How come you don't have that this year? Or last year you had student loan interest of $2,500. This year I don't see any student loan interest forms. And well, we paid those all off in 2024. Okay, cool. Well, great. But it's a way to really to get them to say, hey, you missed this document or that document,
Hmm.
because it's in your favor to get me those documents. So we look at last year's tax return. Sometimes there's some corrections that they can go back and maybe do an amendment or something. But basically, it's whatever you reported last year. We want to make sure we report at least that, and then any of the other changes and stuff like that, if you still have those.
Hard to believe we've got, let's see, that's six, probably about 7 weeks, maybe a little less than 7 weeks left to get those taxes done.
Yeah, it's going quick. We're doing a lot of tax returns. We're already in full mode here. We're working 12 hours a day, 7 days a week. Just staying on top of things. And because we do a little bit different than most tax firms, is we sit down with our clients and we review the tax return with them. We go through line
Hmm.
by line and allow them to ask questions and stuff, because essentially it's their tax return. I mean, it's your guys' benefit to sit down with us. So you have the option, Jay, to bring in, drop off your taxes. We'll do them, and then you can sign for them and pay and walk out. But we also highly, highly recommend sit down. Let us explain to you what we're doing and why we're doing it, so you have a better understanding. So then next year you can look out for some of those other things that'll help you with your tax, deductions, credits, refunds, or whatever.
Let's tell the folks watching where they can make an appointment if they want to sit down with one of you, or one of your tax preparers there at Total Tax Solutions.
Yeah, so a couple of different things. They can come by the office at 1915 North Cavity Drive and drop off their tax returns, or meet us or whatever and stuff. And then we can get an appointment scheduled that way. Or they can simply go online at totaltaxnd for North Dakota.com and click schedule now, pick 2025 tax preparation. You pick the preparer you want, the calendar pops open, you look at that, whatever works for you. You go ahead and click on that, you get an email, and everything's done. It takes about 90 seconds, maybe at the most, to get it all scheduled and everything.
And John Saylor lives for this, folks. So this is the guy you want looking over those taxes. This is all he literally dreams of this after April 15th, April 16th. He sits and dreams about it until next January. That's all he does.
Sometimes, Sometimes it's I don't know if it's dreams, nightmares, or tremors or whatever it is, but I do enjoy it because I really pride myself on learning as much as I can. I'm not perfect
Hmm.
by any means, but I try my best to do everything I can for our clients.
And you got a good crew there as well. Ivy and Cody are working hard for you as well. So get that appointment made if you need your taxes filed. John is the man to do it. John, thank you so much, friend.
Absolutely, thank you, and you have yourself a good week. Looks like the weather's going to warm up a little bit. I'll be down here doing taxes, so feel free to drop off some kind of a sandwich or watermelon or something to ease
Yeah.
our pain.
How about some banana bread? Are you a big banana bread guy?
I love banana bread, but don't put no walnuts in there or pecans or anything.
No,
I
no.
like banana bread, banana bread.
Banana, straight up
So
banana bread. Don't even put chocolate chips in it. Don't put chocolate
nope,
chips in it.
no chocolate chips or anything. Just banana bread is really really good. Don't mess it up with all that other stuff in there.
All right, my man. I got you. I got you. All right. Thanks. We'll catch up with you next week, pal.
Sounds great. Thanks, Jay.